Hey, how's everybody? I got another update for you guys regarding the Washington State Long-Term Care Payroll Tax. Also, we'll be talking about recent comments from the Long-Term Care Insurance Commissioner regarding future legislation and how people that cancel policies after receiving the exemption could be looking at a potential tax evasion charge. So stay tuned for more information on that. So just last Friday, I received another update saying that more carriers have pulled out of offering coverage to Washington State's residents. So as of today, there's only 3 carriers left that are offering long-term care traditional insurance policies. So those carriers are currently National Guardian Life, Northwestern Mutual, and New York Life. So if you're looking to get a traditional long-term care insurance policy, those are your 3 options left. Now remember that the traditional long-term care insurance policies typically have lower premiums, but those premiums are not guaranteed. So you have to take that cost into account and think what it could be, 10, 20, 30, 40 years down the road. So remember, you're purchasing the policy, you just have to keep all that in mind. These policies also might qualify for the Washington State Long-Term Care Partnership Program. If you're not sure what that is, I did a video on that and I'll link that up here. If you're considering going the life insurance route with long-term care rider or the hybrid, which is part life insurance, part long-term care, both those options are still available with a great many number of carriers. So you still have those options available. Now, with so many people applying in such a short number of time to these carriers, they're well behind on issuing policies. So please don't delay in getting yourself a policy. So the last thing we want to do is wait till September, October, and it takes longer than normal to get the policy issued, and then you miss the November 1st cutoff date. So get to work on getting a policy in place today if you're planning on opting out. Now, one other update I had for you guys was regarding the canceling of long-term care insurance policies after you got the exemption. So in my last update video, I told you guys that I emailed the state and they got back to me and said that at this time, there currently is no penalty for people that get a long-term care policy, get the exemption, and then cancel the policy therefore after it. However, a recent conversation with the Washington State Insurance Commissioner said that this is actually a form of tax evasion, and future legislation could require audits as well as annual recertification of your long-term care certificate or policy. So that being said, you could get away with it today if you're planning on canceling it, but in the future you could be required to get your long-term care policy again and annually recertify it. And if you don't have it or they found that you did cancel it, you could be looking at some tax evasion charges. So it's probably not something you want to risk. So if you're thinking about buying a policy just to cancel it, you may want to think again. Remember that you can change long-term care policies down the road. So this policy that you purchased today doesn't have to be the one you keep well into your retirement. If you're still young and you want to upgrade your coverage down the road, you definitely can do that and exchange it for a better policy later. So another question I've been getting quite a bit is, should I actually opt out of this long-term care tax if I plan on retiring in the next 10 years? So if you choose not to opt out of the plan, you're gonna have to pay this payroll tax up until your retirement date. Now, if it's 1 year from now, it may not be a big deal, but if it's 8 or 9 years, that could be quite a bit of money that you're just throwing away into the program. So the way I look at this is long-term care is an important piece. If you are able to financially afford a decent long-term care policy, one that's actually going to do something for you throughout your retirement, should the need arise, then you should definitely make plans to go get a decent policy in place. If budgets are tight or maybe health isn't the best and you're not sure if you can qualify for a decent plan or a plan will be too expensive, if that's the case, you're probably better off just sticking with the Washington State's version of the long-term care plan and just cutting your losses there. Now, one other thing to keep in mind is that your long-term care premium is considered a medical expense and could potentially be tax deductible. So anytime that your medical costs exceed 7.5% of your annual income, those costs can be deducted from your taxes. So if you already take your current healthcare costs and you add on the long-term care costs, if that puts you above 7.5% for income, that excess can be deducted from your taxes. Now, in the event that it doesn't exceed 7.5% of your income, long-term care, because it's still considered medical costs, can be paid for by a health savings account. So if you have an HSA, you could potentially use that to cover the costs of your long-term care premiums. But remember that if you're purchasing a hybrid policy, so a life policy with long-term care rider on it, only the premium dollars associated with the long-term care rider specifically can be counted as tax deduction, not the entire policy. If your premium was, say, $1,000 for the year, and the breakdown was $500 goes towards life insurance, $500 goes towards long-term care, only the $500 that was associated with long-term care is deductible from your taxes or can be paid for by your HSA account. If you want a free guide to help you guys make the decision as far as what long-term care policy you should put in place for yourself, I have a long-term care guide in the description below that's free to have. Also, make sure you subscribe so you don't miss future updates just like this one, and I'll see you guys next week. Remember that your future depends on what you do today.